Yeah, good day, viewers. My name is Sunday. You are all welcome to Having Forex. Today we are going to be discussing two types of candlestick patterns. As a matter of fact, the topic of today is candlestick patterns. You know, candlestick patterns in the Forex market, they all represent the activities that is going on while people are trading. We have just two type of people, two type of trade that is going on. We have the buyers, we have the sellers. That is just the two. It's either you are buying or you are selling. So the activities during the process, candlesticks, they are the things that you will be seeing. You will not be seeing any buyer physically. You will not be physically seeing any seller. Rather, is the candlestick that will be telling you what is going on during the periods you as a price action trader that will be trading. Or put it this way, the time frame that you are in is the candlesticks that will be telling you what is going on as the trade is going, because you'll be seeing the candle printing. It's just two candles. We have, let's use the popular colors now, but as you advance, you can modify the colors to suit your own personal, your own personal color, But the two major colors that is well known is the green candlesticks and the red candlestick. Now, the candlestick is just like, for example, you travel to any country that that don't speak your language. Imagine you find yourself there. What will happen? If you don't learn the language or you don't know how to speak the language, how will you communicate with people? How will you even know what is going on? You just be seeing human beings moving here and there. Some people will be going to market to buy things, supermarket. Some people are doing transactions. You just hear them talk, but you don't understand what is going on. So if you bring it down to forex trading, it's like that. You just be seeing candle printing. You don't even know what they represent. So that is the reason why you should know all these candles. There are so many, but I promise you I'll be taking them one after the other so that you won't get overwhelmed with lots of information at a time, because this journey is better taking it step by step, from the basics to when you now get to a point of being active, practicing what you have learned, to a point where you get professional. Once you open your chart, you already know what is going on. Once you see a candle, you know what it means. So we have what we call bullish engulfing candle. Don't get scared about the name. It's like that. It's a bullish, we call it bullish engulfing candle. At the end of this training, this video, you will see it there. It's already captured. You will see it. Two types of candlestick. We have the green one, which is the bullish engulfing. We have the red one, which is the bearish engulfing. Now, the bullish engulfing candle represents the buyers in the market. Just like in the market, people go to market to buy, while some goes to market to sell. The same thing happens in the forex trading. You know, as a forex trader, it's either you are buying or you are selling. So that is just it. So the bullish engulfing candle is a green candle that represents, anytime you see it, it represents the buyers, people who are buying. But this time now is a currency. They are trading the currency that currency that they are trading is they are buying. You see green candle. The one that is red is called the bearish candle. People who are, those are the sellers. We have the buyers and the sellers. So the green candle, which is the buyers, that represent the buyers, or you say the green candle represents a bullish candle. Bullish candle. That's why we call it bullish engulfing. That bullish engulfing, for it to be valid, for you to say that a candle is a bullish engulfing candle, it must have a candlestick, a short candlestick, it can be any candlestick, behind it. Then you see a long candlestick, even if it's not that long, but is taller than the previous candle. So once you see a candle like that, maybe for example, it's a red candle first, then you now see a green candle in front, because candlestick print one after the other. So if the first one that printed is red, let's say for example, the first one that printed is red, then the second one, the one that follows, is green. And you have to wait for it to close for you to be able to determine whether it's a bullish engulfing or not. Okay, because even if he prints green and close the same height, it's not a bullish engulfing candle. For it to be valid as a bullish engulfing candle, it has to be taller than the previous candle, the candle at the back. It's very, very simple. Very, very simple. For it to be called a bullish engulfing candle, the bullish engulfing candle, the previous candle must be shorter, then the one that is green must be taller. Must be taller. That is what we call a bullish engulfing candle. And that bullish engulfing candle is not just a bullish engulfing candle. It happens in so many ways. Number one, when you see that bullish engulfing candle at what the position or a level where we call a support level that is down in a layman language, down, because we have what we call support level, down, resistance level is the upper side. For you to get the understanding, let me break it down this way. Support level is down, resistance level is up. Just take it like that. That is how it is. Support level is down, resistance level is up. Now, the bullish engulfing candle, once you see it printed at the support level, meaning down, it shows that there is a trend change. Change of trend is about to occur. It's a signal that tells you that, oh, the trend was coming down. Now, all of a sudden, there's a bullish engulfing candle. The last candle that printed was red because red prints and goes down. Green prints and goes up. So once you see the last candle last printed and it's at the support level, the next candle, that we call it next market bar, start printing. You just see start printing green. You see it pushing upward, pushing upward. Then it's now taller than the previous one. By the time it finished printing, you see the height is taller and is a green candle. Just get ready to place your trade because that is to tell you that the trend is about to reverse. A downtrend is about to reverse and is going to be going up. That means, what it then means is that the buyers, they have overpowered the sellers. Then you now see change of trend. They have overpowered the sellers. Okay, let's say for example, in a market, you see people selling. Then at a point there's a demand. People want to buy, and there's no more product to sell. What happens? The price will go up. It's very simple. The price will keep rising because there's a demand. People want to buy something, particular something, and that thing is no longer available. You see price skyrocketing. Price will start going up. And when you reverse it again, when there are no buyers, you see people, sellers, they have plenty products. Let's say, for example, this is a product. So many, like 10 people are selling this product, and nobody is buying. What will happen? And when you see more sellers too, what will happen? The price will start coming down. So by the time you see buyers flooding the market for a particular product, and after that time, that product is no longer available or is scarce. What happens? Price continues to rise. That is exactly what is happening in the forex market. I tell you guys, it's very interesting. The only thing you need to do is to study hard, learn it. Don't just jump and start trading. You must learn the basics, learn the fundamentals, grow yourself before you start trading. Thank God there is demo account. You open demo account, as you continue learning, open demo account to practice what you've learned. That is just it. Now, it does not just signal trend reversal. That is, the bullish candle does not just signal trend reversal. It also signals trend continuation. Now, it might be going because we have what we call impulsive move and corrective move. Impulsive move and pullback. Just like something, they will say anything that goes up must come down. So if you see price rocketing, it will make that move. If you are not a professional in the field, you won't understand. You just jump in and you jump in at the wrong time. So when you see price is going, taking a speed, that is an impulsive move. It will get to a point, it's going up, but it will get to a point, then it will retrace, it will come down a little. It will look as if sellers have overpowered the buyers. It will come down a little, it get to a point, then that candle will print again. or there's what we call pin bar. But the pin bar must be green. At that point, there will be a rejection with a long pin bar, but green candle, then you see market reverse and start going up again. So it does not just act as a trend reversal, it also acts as a trend continuation or continuation of trend. So that is just it about bullish engulfing candle. And bullish engulfing candle, like I said, represent the buyers in the market, and the color is green. But don't worry, you can modify the color to suit your own color anytime by the time you are a little bit advanced in the system. One moment. Then another point is the bearish engulfing. That is another type. Is what we call bearish engulfing candle. Bearish engulfing candle is that type of candle that you see at the top. When you see it at the top, like I said, we have the support, that is it down. We have the resistance, which is the upper side. The bullish engulfing candle appears at the bottom. Not necessarily at the bottom. A support level can be at anywhere. I will explain as we progress. I will explain it now. The bearish engulfing is that candlestick is the opposite. Is red before it can be a valid bearish engulfing candle. Bearish engulfing candle, it must be longer than the previous candle at the back. Let's say, for example, there's a trend going up. It gets to a level that it now stops. You now see a dodgy candle, very small candle. Dodgy candle is an indecision candle. The other one, with that, I will teach that in the next video. You see a very small candle. You don't even know what it means. After a while, after that one has closed, because it depends on the time frame. It might be on 5-minute time frame, it might be on 2 minutes, 1 minute, 15 minutes, 1 hour, daily, weekly, monthly. It depends on how you feel like trading. So at that top, as the trend is going up, it gets to a point, you see a very small candle with wicks. The next bar market, you see a very small candle, but it's a little bigger than the previous one. Then the next bar market, the next candle, you will not see a long candle with color red, a red candle, printing, and it's longer than the previous one. As soon as you see that candle that is longer than the previous candle, immediately that candle closes. Just place your trade, put your entry. You just ride with the trend. So that is just how it is, a secret. So for it to be valid, like I said, it must be longer than the previous candle, and that candle must be red. You see the trend going down. So we have the uptrend and the downtrend. So the uptrend is the green candle, the downtrend is the red candle. So once you see that, place your trade. You just ride with the trend. And that is, it's a very good risk-reward ratio if you are able to identify that. And apart from that, if you are seated in front of your computer and you see it straight, don't hesitate, That red candle, the bullish engulfing candle and the bearish engulfing candle, I beg your pardon, signifies a bearish reversal. The candle, it signifies a bullish reversal, I beg your pardon. The trend that was going up was bullish. Then when that appears, it will reverse that bullish trend to become bearish. It will start coming down. So it signifies a bullish reversal to the downward. You know? Now, the point there is, once you see that candle, you know that there is a change of trend. And also, it also signifies change continuation in some, because when a trend makes an impulsive move, retracement, when it wants to continue the impulsive move, it shows that candle again to the direction of trend. That is the red candle. You see that at that point, you see a rejection. Because if a trend is coming down, it cannot just start going down. No, it will make an impulsive move. Then there will be a retracement as if it's going back up. So it will get to a certain point, there will be a rejection. You see a pin bar, a candle, you see a candlestick that has already been printed. You will not see it. Before it will close, it will remove the body to a certain level. You'll be seeing a pin. Then after that, you now see a bearish candle again. That means the trend will continue going down again. So to recap, a bullish candle is a bearish reversal to the upside. And I said it represents the buyers in the market. Why? And for it to be valid, it must be longer than the previous candle. And it usually occurs at the support level, which means the downside. Then it can also appear at a point to signify the continuation of trend. Why the bearish engulfing candle usually appears at the resistance level, which is the upper side, and it signifies a bullish reversal. And it can also act as a trend continuation. So you can see the bullish and bearish is just opposite. So don't get it confused. When you see green candle, is bullish. When you see red candle, bearish. That is just it. So, and those are candles that you can always see in the Forex market, but you can modify it to suit your own personal color, whichever color you prefer. If you want to now modify the red, the blue, and the green to be blue, you modify the red to be black, you can do it. I can show, I will teach that much later, not now, because those ones are not important now, you know. So that is it about bearish engulfing and bullish engulfing candle sticks pattern. Yeah. Another two things that I just want to chip in before I wrap up this section is, I mentioned support and I mentioned a resistance. So it's good I will explain it in details. I'll make a full video about support and resistance. But let me just, explain it so that we will not get confused. A support level, it's a level where price action will get to as it's coming down. It will get to that place, there will be a rejection. It will turn back. It will turn back when it start going up. Maybe later in the day or 2 days later, it will still come back to that same level. It will still get a rejection. I beg your pardon. Something will come down, get to this point, reverse. It will go up. Do maybe after a day or two or under 24 hours, it will print again and come down to the same level, not the same point. Because once a candle printed here, and let's say for example it's going up, a candle cannot print there. It can give a little gap, it comes down. So you understand what I mean? This is a flat surface. Price action is coming there, a candle printing like this, coming down, get to this point, reverse, get to this point again, come down, hit this place, like this again, went back up, come again. Anytime it gets to this point, this level, it always gets rejected. That point is where what we call a support level. And for it to be valid, price action will get to that point and get rejected more than once. As a matter of fact, for it to be a valid, a resistant level, it must be more than 2. If it is not more than 2, I don't classify it as a support level. And any professional will tell you, you must at least, it must get rejected more than 2 times. We call it double tops. Once you get rejected more than 2 times, you know that that level is a support level. Anytime price gets to that place, it will always bounce. It goes back. And there's reason for that, because people, all those banks, professional traders, they know that place. They have already set their trade there. So as soon as it gets there, for it not to cross, it will bounce. It will reject. That is it. That is it all about a support level. A resistance level is up, like I mentioned. So you can imagine price keep going up, going up, going up. Anytime it gets to this upper side, it gets rejected. It comes down. It will go around, go around, go around. When it turns again to go up, it's just like a bridge or a barricade. Let me put it that way. It cannot break through it. Anytime it gets there, it rejects, it comes down. Anytime it turns again to break through it, it comes down. But there are cases where it will break through. You understand? Anytime it gets there, it gets rejected. For it to be valid, just let's keep it simple, because that one is more complex. Because we have what we call breakout. It's a breakout strategy on its own. It's another video. It's a video on its own. It's another course on its own. A breakout. We have the first breakout. We have a breakout and we have the first breakout. So that is we'll treat that much later. So anytime it gets to that level, it gets rejected and comes down. It's not necessarily that it must come down, hit down. It will reject, it will go back, go and gather momentum and see if come again, see if it will, come and break through again. So anytime it gets there, it get rejected. Anytime it gets there, it get rejected. So for it to be valid, to be called a resistant level, for it to be solid, it must be more than double top, must be more than 2 times. Gets there, get rejected, comes down, gets there, get rejected, comes down. Even some people will not regard that level as a resistant, as a strong resistant level, if not more than 3 times. So it depends on, for you to be more, sure that that place is a strong resistant level. Some people will say after three touches, they will not regard it. But I tell you, not just once, but after 2 times, it's a regarded resistant level. Now, a recap. A support level is a level where when price is going downward, it gets to that place, get rejected once, twice. Once it gets rejected once, twice, it's a support level. That means anytime price comes to that level, price will always respect that level because it will always get rejected. But it can break through it much later. Okay. A resistance level is a level where price gets to as it's trading up. Once it gets to that level, it gets rejected, it comes back. It will go back again to try and break through it. It gets rejected. After two touches, it's regarded as a resistance level. 1 moment. So I hope you guys understand, because understanding is the key. Once you get the understanding, everything will just flow and be very simple. So at the end of the video, you will see it. The image that represents the bullish engulfing candle, and which is a green candle, and the bearish engulfing candle, which is a red candle. Now, the bullish candle represents the buyers in the market. The sellers, the bearish engulfing represents the sellers in the market. So that is it for today, guys. In the next video, I'm going to be giving you other candlesticks pattern, because all those things are the language you as a price action trader that you need to learn. Like I said, the beginning part of this video, if you go to a country that you don't know how to speak their language, you cannot communicate. Yes, you know how to talk, you hear, you have sense, but you just look as if you don't know what you are doing, because they don't understand you, you don't understand them. So that language barrier is always there. So this is the language of, for you to be a forex trader, you must learn the language. This is a language. And those things are those candlesticks patterns are those things that you will be seeing printing, just printing, just be seeing them. They represent the actions and what is going on in the market, whether the price is rising or the price is going down, or is consolidating, or the price is just is a choppy market, or it's a rangy market. It's the candlesticks that will tell you all those things. So on this note, I will tell you what you just need to do for me, because this thing I'm just giving it for free, because I know that it's not easy to be, it does not just come cheap to be, or you want to be a forex trader. It's very complex, but I promise that I'm going to make it simple, as simple as I can, for you not to get overwhelmed. You know, it's a learning process. By the time you start doing it, you start watching this video, you can watch this video all over again. When you play it, finish, start again, so that you can really get the information. And I urge you guys, before you start, get a pen and a paper. It's very important. You cannot just put everything in your head. You will forget it. Get a pen and a paper, a pen and a note. Jot things down so that you always refer to those things that you have jotted down, in future, as you progress to become a better trader. So on this note, I just want you to subscribe to my YouTube channel, share, hit the like button, and if there's any comment or anything you want me to throw more light on, all you need to do is email me, or you can drop the comment below. Thank you and have a wonderful day. Bye.